The Sensex and Nifty benchmarks have corrected 13% and 15% respectively from their all-time highs of 2021. Some select sectors that have borne the maximum brunt of this correction are IT, banks, metals, and realty. Even though it appeared that the worst was behind as COVID-19 risks subside, the geopolitical crisis has sprung up new challenges that continue to drive investors away from these sectors. The BSE IT, Bankex, metals, and realty indices have entered the bear zone after 2 years since 2020, cracking 20 to 30% so far from their record highs that were hit between October 2021 and January this year. Elevated commodity prices, an accelerated rise in interest rates, and the onset of liquidity tightening have weighed significantly on these sectors, leading to their sharp underperformance. The metal industry, for instance, has been marred by high costs as prices of key inputs touched record highs this year on supply disruptions. Even though the prices of ferrous and non-ferrous metals have begun softening on demand concerns, the outlook for the sector remains weak, analysts say. According to Edelweiss Securities, weak demand due to the lockdowns in China is now starting to weigh on prices. Hence, we believe that despite supply shock, demand could soften materially, both hurting metal prices and demand. JP Morgan, meanwhile, has downgraded the Indian IT sector to underweight, cutting target multiples by 10 to 20% across the pack. Rising margin and revenue headwinds in the near to medium term from a potential macro slowdown will mean that the sector's earnings upgrade cycle is behind. We also see peak revenue growth behind us and EBIT margins trending down from inflation and mean reversion. Edelweiss Securities remains underweight on the real estate sector that has long benefited from high demand spurred by low rates. However, it believes that rising rates along with slowing growth could now weigh on investor returns. Despite the sharp correction, the valuation in the sector remains quite high, it adds. In the financial space, experts say that growth in pre-provision operating profits would shape returns in the sector from now on, instead of reduction in credit costs. Hence, analysts at Edelweiss Securities prefer private banks over PSUs, as it believes these players tend to score well on the pre-provision profitability front in a liquidity tightening scenario. On the other hand, they add, rising interest rates will likely be challenging for NBFCs especially, as cost of funds will see an increase. Against this backdrop, Business Standard's Avdut Bakkar finds out what technical charts indicate for these underperforming sectors.
The Nifty Bank Index, which has jumped over 34,000 levels, could see further upside and start to build positive sentiment. This is so until it holds the most crucial support of 100 weekly moving average, which is placed at 32,630 levels. Considering this perspective of the strong support of 100 weekly moving average, market participant investors and traders can look for buying opportunities and accumulation in respective stocks that are in Nifty Bank segment. Whereas for Nifty Metal and Nifty IT, the outlook for both the indices remains avoid, considering they both are trading under the crucial support of 50 weekly moving average and 200 days moving average. Besides this, if one could go and see the amount of selling pressures and every upside has seen a sell-off, one needs to be cautious on both the indices. In terms of Nifty metals, one could definitely see a positive upside only if it crosses 200 days moving average place at 5800 levels. Whereas for the Nifty IT, one could expect a short-term pullback, considering the way Nifty IT index has dropped over 25%, has dropped nearly 30%. So there are higher possibilities as it trades in the overall oversold territory. So for the Nifty IT, one needs to consider 28,200 as the most crucial support, and if Nifty IT holds this support, then we could see some short-term pullbacks and this index can rally further.
Market action will be stock specific today as the Q4 corporate earnings season enters its last leg. BHEL, Zomato, JK Cement, Power Grid, Shri Cement, Divi's Lab, Birla Soft, Ramco Cements and SAIL are among those companies that will be on investors' radar. Besides, crucial events lined up for this week include Delhi Very's likely market debut on Tuesday and the monthly FNO expiry on Thursday.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.